most economists are predicting that the RBA will cut rates, but not 50 basis points, probably 25 basis points. We have to keep in mind that the RBA is focused on the domestic Australian economy and the price levels here. We're not expecting the tariffs to have huge impact on import prices into Australia. So all of the existing pressures or considerations that the RBA is going to look at when it's making its decision will still be fairly the same.
And as to these impacts here on Australia, that'll largely be determined by the impact of these tariffs on China, right?
Yes, I mean, China is the big one. Australia sells much of its goods, and in some markets, up to 80% of the market goes to China. So if China experiences a significant slowdown or happens to even have negative growth, that will, of course, flow on to Australian businesses. But also we have to keep in mind that Korea and Japan have been hit with significant tariffs, and they're also very large markets for Australia. So we really need to keep an eye on the whole region.
And just on China, with them refusing to back down in this standoff with the US, at this point at least, there's really a projection of confidence here. Can they withstand these tariffs?
Well, the Chinese economy really has come a long way. If we think about, what it's been producing over the last 20 years, it's getting into increasingly sophisticated products. And so it's not as dependent on foreign sources for electronics, for cars, for even things that the US likes to export in terms of services for IT or other types of media. These things are now being produced at competitive prices in China. So Chinese consumers have viable alternatives. They're not reliant as much as they used to be. And so I'm sure that's playing into the Chinese government's decisions to stand tough to the US.
Now, our Prime Minister was speaking just a moment ago in Sydney and says that there can be amazing opportunities for Australia in this. Where are they, and who should Australia be looking to forge alliances with following these tariffs?
Well, there will be other countries from an import perspective. There will be countries who are looking for new markets, and therefore Australia can become a good destination for those new products, or maybe even have it at a better deal. Even though the Australian dollar is weak, so that does make imports more expensive, it makes our exports cheaper. So things like tourism or education exports will now be much more valuable value for money for especially tourists from the US or Europe. And so there are opportunities there, as well as potential opportunities for agricultural goods coming out of Australia that can maybe come into markets that no longer find the US products as competitive. So we can potentially increase our exports of those as well.
Yeah, so there's some of the silver linings there. Our guest earlier this morning, Professor Josh Hausman from the University of Michigan, said that the most damaging part of this is not actually the tariffs, it's the uncertainty that it's created and also this upending of world economic order. Do you agree with that?
Yeah, I do agree with that. I think businesses are used to things changing and costs changing. And if they can see what's coming, or they know something is going to become more expensive, they can make arrangements. They can plan, and they can shift suppliers or do what they need to do. It's really this inability to plan or inability to make decisions about long-term investments that are going to hold businesses back and that are really going to hurt long-run efforts to come out of this inflationary period and really get on firm footing for a growing economy. And it's really the US economy that's going to suffer the most.